Good morning, everybody. It's Friday, August 30th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here had December corn up 4 1/4 at $4.25. November soybeans were up 14 3/4 at 10.07 1/4, and December Chicago wheat was up a penny at 5.49 3/4. This morning, USDA announced export sales announcements of 132,000 metric tons of beans to China for 24. Also announced was 100,000 metric tons of meal to Colombia, also for 24. We had PCE out this morning. That's personal consumption expenditures, key inflationary report that the Fed looks at. It was up 0.2% and up 2.5%. From the same period a year ago. Both those numbers fell in line with expectations, leading some to believe that September could be the cut that everybody's been anxiously awaiting and talking about. With that, on the delivery side, oil, 35 deliveries overnight, beans 6, corn 12, wheat 416. Dustin, maybe a few thoughts. Nice to see a pop overnight. No beans back above $10. Maybe a few thoughts to get us going here this morning. We'll throw it around the room.
Yeah, Dan, thanks. Yeah, we're seeing a good pop here coming out of First Notice Day, and that was, I think, a bigger deal for corn than it was beans. So beans are probably along for the ride a little bit, and certainly, the weather we've had in the last week, coupled with, a still fairly dry forecast on the next 2 weeks. I think we're looking at on the European model, 60% of normal rainfall for beans. Maybe that's why we're getting a little bit of support there. However, just even in the last 20 minutes, that Brazilian currency has started to crater a bit, coming off the high and turning lower. So I'm already starting to see bid asks stack up to potentially somewhat of a softer open from where we just closed the overnight. We'll see. But the real is just has such a big impact right now on where the bean price goes. So I'd be watching for that. But just going back to corn for a second, we've had, down into the 380s on D's corn. Now we're back above $4 as of right now, $4.25. Any further strength into the lower fours prior to what looks to be a record harvest coming should be a consideration to at least establish some sort of a floor in some cases, if guys have a lot of harvest exposure. So just thinking ahead here, this is something that we had hoped to see coming out of First Notice Day. We'd hoped to see some sort of post First Notice Day lift, because all that pressure is no longer, on the front end of the market, that September contract from the, the end of that old crop season. So just want to keep that kind of in the forefront of your mind. If we do get any more strength, maybe it's an opportunity for hedging for any harvest risk that you have.
Jace, kind of put you on the spot here a little bit, target wise, everybody's that's going to be the next question, so we got popping beans, popping corn. With, by all accounts, we've lost little over 160,000 in open interest in corn in the, since last Friday. So there's certainly some transfer going on within the market, but what do you got for targets? I mean, where do you tell a guy to at least be getting interested again if this thing continues to pop?
Well, I think you got to see what your needs are, right? Like, what do you need to sell short term to eliminate the risk going into harvest? And I think your target's got to be closer, to reality versus long-term targets. So it's a tough one to answer. I would say short-term targets, I think there's a moving average right around 409 December corn. And with the carry in the market, I mean, you got to look out to the March and the May and the July contract with carry. There are some decent levels. So, December corn rallying 10, 15 cents. I'd really, if you think your yield's going to be really good, I think you got to start, taking some action around those levels would be my thought, to get corn much above that short term. We got the September report, in a couple weeks, I think it's the 12th, so that's going to be a big deal. Like I said before, I think this market is trading that yield, the 183, if not even more, right? Big crops get bigger. So I think the market tends to think that they might, or historically have tended to raise that yield. So I think you got to get through that report. And if you get a little bit of a friendly yield number, then maybe we start to trend. We first notice day today, right? A lot of times we put a low in September 1 or somewhere close to September 1. If we can start to revise that corn yield back somewhat, and start seeing some good demand, and maybe end users start to say, okay, maybe I do need to step in here and lock up some of my needs while it's still cheap. Maybe you have a little bit of strength going into the end of the year. Yield, it's going to be obviously yield's going to be a big factor on price, and how big this crop really is. We're already trading 6 or 7 bushels above a record, 6 bushels above a record. Is it 8, 9 bushels above a record, or is it only a few, right? I mean, that's a huge difference. So, I think we're probably close to the right yield, but the next few reports are going to dictate, if the strength that we see after first notice day holds, or it caters, or craters, I should say. So tough to say, but it's nice to see some strength right now. And like I said, short term, don't get too greedy. Like I said, maybe another dime higher than here, start to put on some kind of hedging strategy.
Do you feel the same way about beans?
Yeah, I do, for sure. Especially if you're looking at a good bean crop. My opinion is that we're trading too large of a bean yield as it relates to corn yield, if that makes sense, right? Like the last USDA report, USDA raised the bean yield at a larger percentage above trend than they did the corn yield. And then we had the Pro Farmer Tour, and they kind of did a similar thing with their pod counts. They raised their bean yield and kind of dropped their corn yield. I think that was wrong, as it relates to corn, right? I don't know what the yield is, but I would say if anything, bean yields have a potential to be more disappointing than corn yields. I know I'm not necessarily, taking, it's not necessarily a huge prediction, but
big leap.
or a big leap, but I don't think that, all the anecdotal evidence of growers we've talked to, stuff we've seen, would suggest that might be the case. We know there's a really, really good corn crop out there, and not in all areas, obviously. But the beans are always tough on yield. I guess that would be my bias, that if there's going to be any kind of surprise in yield, and it's not going to be a huge surprise, but just maybe disappointment in a large yield, be beans. So,
Yeah.
Dustin, something to piggyback there?
Yeah. So I'm thinking, just in terms of you're talking about targets, there are a lot of ways to hedge, right? And so incorporating the fact that spreads are actually quite narrow compared to where they were this time last year. So I want to show just like your history of spreads last year on first notice day. So this is spreads as of today. We've got our 12-month carry from DEES24 to DEES25 was 39.5 cents. That's as of yesterday's close. 18 to March, March to May is another 10. May to July is another 6.5. There's actually a slight inversion, July to Sep, and and a carry from Sep to DEES. So you're talking 39.5 cent carry to go out 12 months. Full carry is somewhere closer to $1.20 when you factor at like prevailing interest rates. Look what happened when we got to first notice day and all of these spread dates last year, and this was coming in with a much tighter carry in and a sub-trend crop. Right. We did have plenty of corn acres last year. We had really high production, but just keep that in mind is that, look at 18 cents today. We were 26 cents DEES to March last year. If you rolled every first notice day, one day prior to first notice day, which is, avoiding delivery, total carry ended up being 84.25 cents, which is a big percentage of that 12-month carry. So that's something just to kind of keep in mind is like if growers are quicker to sell at harvest this year, if they're saying, hey, I'm not going to get caught being long DP, I'm not going to get caught doing a basis only contract and rolling it forward again. Everyone is kind of snake bitten from those types of contracts last year. And I think they're going to be quicker to sell personally. So this is what when we talk about harvest pressure, if you don't have a plan to deliver against, and let's say the river levels are starting to drop a bit, it's still a dry forecast, that's only going to exacerbate that problem. Is these contracts are all river dependent, really. So if we see March or East to March, for example, that's a 24-cent receipt cost plus interest cost. You're talking about 30-cent full carry. We're only at 18 cents today. So if we get into a true harvest logistic problem where Iowa yields and Illinois yields just blow estimates out of the water for corn, and there's a lot of ground piles and the river system's kind of overloaded, and we also have Memphis river levels at -6, like they're projected to be right now. You could see, a bit of a problem for harvest basis and harvest flat price, and your recourse to go out and sell at harvest and go buy it back on the board, if you don't have that storage, is going to be expensive, right? You're going to have really high DP rates. You're going to have an expense of a high basis expense. I mean, if you do a basis only contract, let's say you take a 20 under harvest basis, and then we get back into a 26-cent carry to March. It's usually a 1 cent fee. You're going to roll that forward. So you have 20 under, all of a sudden turns into a 47 under spread, a basis, right? So like that cost of rolling a basis only contract quickly adds up. So there are ways to, advanced ways to try to dull down that risk if you're trying to maintain length, if you're not ready to sell yet. I think there's a lot of areas between black and white and shades of gray of how to tone down harvest risk, in my opinion.
And so to summarize too, Dustin, I mean, with that all being said, it builds upon Jace's idea that if you were to continue to see a little bit of a pop here, to be cognizant, and if you have to move those bushels at harvest, get that stuff locked in, because in your opinion, I mean, it could still be pretty ugly at harvest. Potentially.
Yeah, no, we got to be very careful on recommendations because everyone's in a different spot.
Oh, totally.
In 2020, we could have been having this exact same argument in August of 2020, and then guess what? That sub $4 price, mid threes traded into the mid sevens, right? Mm-hmm. By the time we got to May, so there's always that chance for a narrative flip, no question. But there's some things that you can kind of see coming down the line, which is like I only have this much storage. And here's how much more I have to, that I know I'm going to have to deliver against the harvest price. Maybe you have a good insurance policy and you're relying on that as your plan B floor. What's the post insurance expiration look like? And that's where I think it's hard to give a cookie cutter response. Like Jason's, I think you're doing it exactly right. Like everyone's going to be in a different spot, but I think there's ways to tone down harvest risk in particular. That's what I'd be most worried about. And all the other things we've been talking about on the show, like flat price, maybe it has gotten too cheap from a currency standpoint. We've lost so much purchasing power of the dollar. Other commodities like gold have been hitting all-time highs. Perhaps the price of corn, it really did get ahead of itself here, and we need to rebound. Well, that might be something that happens outside of abundance, where spreads are still wide, flat price rises. So there's a lot of ways to, like I said, just like get a logistical plan in place at least, and then you can kind of consider from there what your futures risk is.
Oh, that's good stuff. And as always, folks, I mean, if you want to talk about your individual operation or some of the things and thoughts that we've got, just give us a call, shoot us an email. We're certainly happy to visit with you about that. Rye, we got a couple minutes here. We finally had some cash trade develop. Feels like that was kind of the big leader in the cattle markets. So why don't you give us a wrap for the week?
Yeah, it's been, meats have been pretty firm, at the first part of the week and started to kind of trail off at the second. I mean, I think we're still kind of in that higher range. And overall, yeah, we're digesting that bearish news on the cash side of the market. It looked like 182, 183 in the South, generally about steady to a buck lower, and dress 288 to 292 in the North. So overall, I mean, like that's really been the focus. That was the expectation. I think just overall, we've digested most of that. On the hog side of things, you've had a pretty good performance on the future side of the market, but on the other hand, cutout has been kind of leading that charge while cash has been kind of lower. So going into next week, just kind of feels like we're not really going to get much cash news. I think most eyes are going to be on the products and on the beef and the pork prices next week for overall direction. But it just kind of feels like, yeah, we're trying to get a little bit more support here. We've kind of run into some of this kind of negative fundamentals, and the market just, I don't think, wants to be too quick to buy into it just yet. So we'll see what commitment a trader has to show as to just how the managed money's position. It feels like the funds have been kind of on this long side of the hog market, even though we've seen some of the cash prices come out pretty disappointing at the tail end of this week, and likely adding to longs on the live cattle side of things as well. So it just kind of feels like we got that support going into next week, and we'll see if maybe we can get some better cash news. August cattle does expire today, so October is going to be in the front, and we've got this nice discount in the market, and we just saw the convergence in August relative to cash. So I think everybody's going to be looking at it like, when does that happen, or if it's going to, or what's right here. So we'll have that argument next week.
Beautiful. Appreciate that, Ryland. It's Friday, which leads us to the best part of the week. It is Fun Fact Friday. Once again, folks, just full disclaimer, we have no idea what comes out of Brian's mouth. We don't ever vet this. So, Brian, what do you got for us today, buddy?
I'll be very tame today, Dan. Thanks, everybody. Welcome to Friday, everybody. Sadly, it's the unofficial end of summer. As we enter into the Labor Day weekend here. So a little history on Labor Day. First started as a parade in New York in 1882 to honor the Union labor leaders. Oregon was actually the first state to make it a holiday in their state in 1887. President Grover Cleveland turned into a national holiday in 1894. So now some fun facts about it. It's the official end of hot dog season, sad to say. So hopefully we all participated in the 7 billion hot dogs consumed between Memorial Day to Labor Day. So Ryland, if you need to catch up, have a couple this weekend. Yes. The first Waffle House opened up in Georgia in 1955. So I'm sure Tiger Woods is very happy about that date. It's sad to see that summer is leaving us, but it is the start of football season. So great things to look forward to. And lastly, it's time to put the white away. Ryland, I'm so sorry about that white romper. It's got to go back into the closet until next summer.
It's all right. I'll bring out my autumnal color romper. Don't worry.
But if anyone's traveling, be safe out there and spend some time with the family, and hope you guys enjoy the long weekend.
Beautiful. Nice. Thank you, Bri. That was good stuff. One thing to note, with Monday being Labor Day, markets will be closed Monday. And they'll be closed actually Sunday and Monday. We will reopen Monday evening at 7:00 Central Time. So just make that note. If the markets aren't moving, it's because nobody's doing anything. So with that, if you like the show as much as we like doing it, throw us a like or subscribe. Helps us out. Keeps you posted on everything AgYield related, the premium content that we put out. So it doesn't cost you anything to do anything to do it. Just throw us a like or subscribe. We, like I said, certainly appreciate everybody on a daily basis that tunes in. Every day that the markets are open, we are streaming live at 8:15 Central Time on X, Facebook Live, and YouTube Live. Once again, markets will reopen Monday evening, 7:00 Central. So we'll be back with War Room on Tuesday morning. Hope everybody has a wonderful Labor Day holiday weekend. Stay safe, and we look forward to talking to you again next week.
Yep. Thanks, guys.
War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.